I want to talk to you about the best credit card processing companies. The thing is, when you have a business and you are accepting payments from customers, you got to choose the right credit card processing company. Otherwise, you'll be losing a lot of cash. You'll be putting you'll be leaving a lot of cash on the table. Okay, so I want to share with you the top providers when it comes to credit card processing, and one very important candidate I want to talk to you about is Stacks. So Stacks Payment Processing actually has become, in the last few years, one of the top credit card processing companies, and you actually saw their popularity and their preeminence during COVID. I mean, when everybody was home and a lot of businesses had to change their business model, they had to change their operations. Stacks actually helped companies generate actually at least process payments. Okay, and the cool thing about Stacks is that the whole platform is built on transparency. So you are able to manage your operations effectively. Okay, and so you're able to see exactly what the kind of revenue you can generate because Stacks is really great when it comes to data analytics. So when it comes to credit card processing company, think about Stacks. Okay, and what I love about Stacks is that they actually allow their clients to have all kinds of payment possibilities. Okay, and you're able to actually get things that you can get set up real fast too. Having said that, generally Stacks remain a great credit card processor for companies who generate at least $7,500 a month. Okay, so you got to reach a certain level of revenue to actually use Stacks. So if you process over $7,500 per month, that's kind of cool. Okay, Stacks is not really good for micro transactions. Okay, if you have micro transactions, I want you to talk to all the other payment processors I'll be talking to you about into this conversation. And what I love about Stacks also is, and what you will love about Stacks is that it allows you to integrate with all the other tools in your tech stack, so that you can really you don't have to go through redundancy like a redundant data analysis. Things can happen automatically and also in a scalable manner. So that's really good. So first, payment processor, think about Stacks. After Stacks, I want you to also think about Square. So Square credit card processing, another great credit card processing company, and everybody knows Square. I mean, Square does a lot of things. Okay, Square has POS systems. Square actually also is a biggie when it comes to digital payment processing in general. So Square offers actually one card present rate for card present payments at 2.6% plus 10 cents per transaction. What I love about this is that it is transparent, it is straightforward, nothing really complicated. Because sometimes when it comes to credit card processing, some processors like to play games with the pricing. They like to play shenanigans, but Square doesn't do that. Okay, Square is pretty straightforward. 2.6% plus 10 cents per transaction for card present transactions. Square has no monthly minimums and now offers a point of sale system in addition to its mobile readers and tablet applications. Okay, now this can be pricey depending on how much you process every single month. So it's just better to contact Square first before you actually set up this credit card processing company. And so, given Square's pricing and capabilities, it's actually a good fit for your business if it processes under $7,000 a month. So, what Stacks would not do, Square can definitely do it. Okay, so Stacks wants you to have a minimum of $7,500 in revenue processed every month, but Square doesn't have that threshold. No, if you process less, Square will take care of you. Not a problem. Okay, so Square actually has solid ratings across various merchants and review websites too, because people love the name, people love the reputation. Okay, most merchants appreciate Square's ease of use and also ability to accept credit card payments quickly through a number of business processes. So this is kind of cool because it really adds an extra layer of flexibility in the payment processing I would say activity. So when you think about credit card processing companies, I want you to also think about Stripe. So besides Stacks and Square, think about Stripe. And Stripe is actually another name that's known in the industry. They've been around for more than 10 years, 10, 15 years now. Okay. And so this is kind of cool. What you will love about Stripe is that you have not only flexibility, but you have ease of use, but also, and this is pretty important, you have transparency. Let me explain. First, Stripe charges almost 3% per transaction plus a 30-cent transaction fee. So, with this cost combined, this particular pricing model gets expensive the more you process, or for the higher quantity of purchases processed, right? So, you have to really see how to position yourself if you were to go with Stripe. So, beyond pricing, Stripe offers processing for mobile and online transactions and supports also recurring transactions. So, and what most users love also is that Stripe uses a deposit schedule for merchant accounts and doesn't actually offer what I call 72-day or like 3-day or 4-day funding. Okay, they offer next day or second day funding. Okay, so you can expect your deposit in 2 days or more, depending on your business and if you are also located in the U.S. So if you're located in this country, you will be paid faster. Okay, that's just what it is. So currently, Stripe doesn't offer in-person payment processing besides from like this payment processing through an app, and there are invite only terminals. So you can apply to get the chance to purchase one of their terminals so you can process payments in person, but the process can actually take longer. And most importantly, it is unclear at this time how things actually can evolve for you. If you're looking for the best credit card processing companies, besides Stacks, Square, Stripe, and PayPal, I also want you to think about PayPal, by the way. So PayPal is the fourth credit card processing company I want you to think about. So besides Stacks, Square, and Stripe, think about PayPal. And PayPal is actually one of the OGs in this space. Everybody knows PayPal. I mean, PayPal is known for peer-to-peer payments, is known for B2C, B2C, I mean, whatever. Like, this is a payment portal. This is a platform that does a lot of things. Okay, a lot of things. And PayPal offers a quick setup, but you will end up paying more for the convenience in the long run. Okay, so while they say that you can start an account in 15 minutes, you will end up paying higher rates per sale actually. And so basically, and this is simply because PayPal is charging you for their good reputation. They're charging you for the fact that they have experience, they have seniority in this space. Okay. Plus, you will find a lot of add-ons in what you pay. For instance, if you want recurring billing, that's an additional $10 per month. For advanced fraud protection, you will pay $10 per month plus an additional 5 cents a transaction on every charge. So this is really really this can get really costly. Okay, so while known mostly for its online payments platform, PayPal also offers new accounts a free mobile reader, but watch out for the higher rates you will pay for convenience. Okay, if you use the scan card feature or key in a card to the mobile app, your credit card processing cost goes up to 3.49% plus 49 cents a transaction. So that's actually the highest card present rate that we've seen on the market. And this also applies to any form of online credit card payments and even invoicing, as this is now their standard digital payments transaction rate. Okay, and if you accept American Express, it is a set 3.5% per transaction, even though Amex no longer costs that much more than other cards, right? So this is something to really think about. So if you are a business owner looking for on-the-go options, PayPal offers their PayPal Here mobile payments solution, but at a cost. So if you want the flexibility to collect payments from anywhere, you will be charged 2.7% for card present payments and the higher rate of 3.5% plus a fixed transaction fee of 15 cents for anything keyed in, okay? So this is something to really keep in mind. And the PayPal Payments standard platform has no monthly fees, but does not include a virtual terminal. So for an online shopping cart, your customers will have to navigate away from your site to complete their payments. And if you want to accept cards directly through your websites or take them over the phone, you'll have to pay $30 per month for a PayPal Payments Pro account to key in not present cards. If you're looking for the best credit card processing companies, so besides Stacks, Square, Stripe, and PayPal, you also have bank merchant services companies. So banks also have they have actually they have actually been in this space for a while. Okay, so most banks offer payment processing. So some banks that have gotten into credit card processing services include Chase. So Chase, you have Chase Merchant Services. You have Wells Fargo Merchant Services. You have Bank of America Merchant Services. And you have Citi by First Data. Okay, so this is something to really think about. And now it might seem convenient to process with the same bank that your business already works with. So if you have a business checking account at Chase, you might want to think about maybe you might be thinking that it will be easier, it will be cheaper to go with Chase Merchant Services, right? However, this is not actually this may not be the right route because bank merchant services are usually the most expensive option for businesses because like other processors, banks often require contract terms with early termination fees. At the same time, many banks use a third-party company for the actual payment processing. This means you are paying more fees, but it's harder to tell where they are coming from. Okay, so something to really think about from a flexibility point of view. So if you think about, let me give you an example. If you think about Chase, for example, Chase Merchant Services, Chase advertises 2.6% plus 10 cents per transaction for in-person credit card charges and 3.5% plus 10 cents per transaction for online payments. And if you lease their terminals instead of buying them, you could get stuck in a long-term contract. What about Wells Fargo? Wells Fargo charges 2.6% plus 15 cents for in-person and 3.4% plus 15 cents for online transactions for monthly processing volumes under under $15,000. Plus, they charge a monthly fee per location. In addition, Wells Fargo's preferred physical terminals are all Clover products, and Clover is a notoriously expensive POS system, which does not integrate with many other payment technologies. That means that if you want to later switch to a new provider, you have to buy all the new equipment, okay? What about Bank of America? Well, Bank of America also uses Clover devices for their payment processing. However, they do sell them outright instead of just leasing at around $429 to $1,200 per terminal. Not only would you be locked into a Clover device, but you also may get locked into a cellular contract. These devices require T-Mobile or AT&T to connect with your Bank of America merchant account. And as far as pricing is concerned, you can expect around 2.65% for in-person transactions and 3.5% plus 15 cents for cards not present. One of the highest rates that we've seen. So if you don't have a business checking account through Bank of America, you will also be paying an additional monthly fee. So, those prices can actually go up big time. So, let me talk to you about the summation here. Bottom line here is that you have, when it comes to the best credit card processing companies, you have Stacks, you have Square, you have Stripe, you have PayPal, and you have actually the bank merchant services companies. Okay, and the thing here is that when it comes to when it comes to, I want you to look on the screen here. When it comes to contract required, Stripe requires none, Stacks none, Square none, PayPal none, but banks want you to have a contract. What about early termination fees? Those those top five providers do not actually have ETFs, but banks do have ETFs. And you can see the card present processing pricing on the screen here, so you have a clear idea who is cheaper based on your industry, and also the card not present processing pricing. So I'm going to put this on the screen because I want you to really have the time to analyze what's working for you and what's not working. Okay, and especially from a flexibility point of view, so you have a clear idea of what works and what doesn't work. So in terms of in terms of flexibility, you got to ask yourself, what are you looking for? What kind of model are you looking for? So in terms of the methodology, so to choose the best credit card processing company, you have to really understand that you want to look at a few metrics, right? The processing fees, the pricing structure, the payment methods, the integrations, but also the business type. So you got to really ask yourself whether you run an e-commerce business or a brick and mortar store, because payment processors are typically geared more towards one or the other. So you'll need to factor that into your choice, right? Or perhaps you are planning to add an online store to your existing physical locations. So to start accepting payments online, you're going to need a payment gateway. So check if your payment processing service offers one. So some may have their own payment gateway like Stacks, while others may require to use a third party like Authorize.net. So you have to really think about that. You also need to consider your average monthly credit card processing volumes before you choose a payment processor. This is important because some companies specifically cater to high volume merchants, while some cater to low volume businesses and will have very different processing fees, right? And also, and I want to really end on that. If you are in a few in a I would say in select industries, you have to be extra careful. If your business belongs to a high risk business industry like you know like CBD, e-cigarettes, or vape, credit repair, online gaming, casinos, etc., a regular payment processor may not be suitable for you. In fact, many payment processors typically don't work with high risk businesses because of their risky nature. So you will need to work with a processor that specializes in working with high risk merchants. Those high risk merchants will usually end up actually, costing you more for payment processing services as a result of the additional unknowns and increased financial risks that these high risk businesses incur. Also, think about customer support, think about security, think about the contrast, and think about the type of processor. So, the takeaway here is that in today's conversation, I spoke to you about the best credit card processing companies. I spoke about the top providers, the summation, and now the methodology. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.